Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
The opposite is true for sell signals. Now, one of the things that we do with advanced coaching and teaching for our clients is this. Generally speaking, I'm sure you've heard the phrase, or this is something I always jokingly tell people, the market will always let you in on every single loser, right? But a lot of times the market will hardly ever let you in on those winners because you don't get filled. Your pricing wasn't right, or you wanted to take a quick profit on the market and you placed your limit order. It didn't quite get there. It hit your price, didn't trade through you. You're unable, right? The market will always let you in on every single loser, and market generally doesn't like to let you in on all the winners. Bottom line, that's how it works. Well, when we come into bullish phases, generally speaking, the market will come down to support because why do markets come down more aggressively to support in a free fall? Because fear creates the market sell-off. Sometimes the markets get right to pivot support, and sometimes they fall just a little bit below support. And I think it's because that fear driving market prices lower causes the market to get near that support because of the panic. On the other side of the coin, I think more times than not, in my casual observation, I can't back test this, I haven't done an actual back test of this, but more times than not, when a market rallies and you're looking to set a profit or looking to reverse or go short against a pivot resistance, and for you pivot point aficionados in the audience, you may relate to this. More times than not, as we look for bearish reversals, the market doesn't quite get to that predicted resistance target levels. So don't get to be too used to the markets going to exactly the pivot level. That's why I like to use backup triggers or some type of an indicator to help me. I just don't buy and sell prices once they hit pivot. I have a second dimension or an alternative criteria that needs to be met to generate a buy and a sell signal. So by establishing what the market condition is, and therefore under those conditions have the groundwork laid out so that we have the predetermined support or the predetermined resistance, once we get up and close to the resistance, I'm looking and I identify that more times than not, markets struggle to rally further because people are greedy. They want to take a profit, and there might be more sell orders keeping the market from going to the exact resistance level. So I'm shying back from selling or looking to sell at the exact resistance level. But in declining markets, I'm going to hold a little bit longer before I look to just be buying. I don't anticipate a market reversal is what I'm trying to say. So hopefully that may make sense to you as you see market conditions as the dynamics are different in trending up markets and trending down markets. The dynamics are absolutely different. Now, when we look at pivots, and if you, on most any platform you trade with, most companies provide you with pivot point analysis. They might be labeled differently, but I think one of the other things that's important is to understand candles and what they really mean. I don't look at, even though in all my books I've written about candle patterns, there's only maybe less than two handfuls of potential setups that I look for out of all of the candle patterns that exist. One thing that I do look for, as you see on our graph bar, or on the chart to our left, is this white real body, which shows that the close is greater than the open. Or we have an, as we could say, close is greater than open. This would be what we call also, or what I consider, a more positive assigned candle for at least maybe programming or coding. What's really important on the chart is to look at what the distance is between the open and close, what the overall length between high and low is, and what the proximity of the close to the high is. So there's several different ways that we could look at the market. Out of this, notice that I've mentioned the close many times. Close open relationship, close to overall range, close to where we are in relationship to the highs. It's interesting because in pivot point analysis, we have 3 points of interest on this candle that we use for pivot point analysis. In fact, if you want to know what the pivot point, how to determine the actual pivot, pivot point equals the sum of the high plus the low plus the close divided by 3. So even in candlestick analysis, we're looking at the high, we're looking at the low relationship, and we're looking at the close. Not so much the open all the time, but really the overall range and where the close is as it relates to the overall range. After all, if you look at some other technical indicators, take, for example, stochastics. Stochastics gives us a weighted value of where the close is as compared to the overall range from a look-back window, depending on if you're using a fast stochastics or a slow stochastics. If you're looking at a fast stochastics, it takes a look-back window of 14 periods. Where's the close as it relates to the high or the low? So it actually, high-low close is a very integral and very important analysis to figure out what the market condition is. And using pivot points, it helps us to determine, based on that condition, bullish or bearish, what our potential ranges might be for the next session. With candles, they give me a more immediate identification of the momentum of the market based on the high-low open-close relationship. So I'm getting multiple dimensions. I'm not just relying on one indicator. I'm relying on multiple indicators, which are all based off the 3 most important aspects that each and every one of us have equal access to: high, low, and close. So on a black candle, we're obviously looking at the relationship that the close is less than the open, or it is a negative assigned candle. And we, just like our white real body, we want to be looking at the relationship of what the overall range is, looking at the fact that the close is less than the open, and perhaps we want to see what the distance is between the close and the low.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.